Hey everyone, welcome back. Welcome back to another week with the Trading Triangle. I am Trader Nate, and I've got my friends Sean and Kay with me. And as we always do, we're going to get into some charts this week. How you doing, Sean?
Yeah, really good. Thank you. Having a lovely weekend over here in the UK. So as you can see, it's nice and sunny. So
It's beautiful
can't be
looking,
mad
man.
at that. Can't be mad at that.
Yeah, I love it, man. It looks nice. Looks enjoyable. How about you, Kay? You having a great day like Sean?
I'm having a great day. It's not as sunny, it's a little cloudy here today, so I have put the curtains here. And what a week we had. 5% drop in S&P 500. Wow.
Yeah, we're going to get into the charts. We talked about these ranges, and if we break the range, and we've been seeing that. So yeah, a lot to talk about this week. A lot of tickers to get into, and of course, we've got audience requests, right? So make sure you guys stay tuned towards the end, and also send in your ticker requests if you're tuned in on the Trading Triangle on YouTube, or if you're tuned in live on X, either at Trader Nate here or on Wolf Financial. So yeah, be sure to give that a holler. And real quick before we get into it, just a quick reminder, disclaimer that this is not financial advice. Nothing we're putting forward should be taken as financial advice, and we are not financial advisors or professionals. We are here to share our trade ideas, have a good time, hopefully provide some entertainment and educational value, and I appreciate you guys all tuning in every week. So I think with that, we should jump into the charts. Let's get after it. All right, so big week last week, big week ahead. I mean, there's a ton to talk about, you guys. This chart here, of course, NVIDIA really stands out. Tesla really stands out. Huge down weeks for those names. And then I'm stealing all the thunder. I apologize. But then the other name that really stood out to me was UNH, United Healthcare, like a big recovery after recent selling. So huge moves last week, but a lot of red. Sean, anything else that I mean, those are the two big names, right? NVIDIA and Tesla.
Yeah, definitely the two big names. We've got Apple and Microsoft as well, dropping 5%, which obviously kind of moves the market, and obviously Amazon as well. You can see in the top right corner-ish. So you can see where the selling has kind of come from, kind of big tech, and does it continue? And that's what we'll probably talk about in this episode.
Yeah, a lot to talk about here. What about UK? Anything else that we haven't touched on?
Yeah, you look at Netflix after reporting earnings, they dropped almost 12%. SMCI dropped a lot, so it dragged Nvidia and Broadcom. Broadcom was down almost 11%. Yeah, I mean, you could see from the numbers by itself, right? The entire index was impacted.
Yeah, double-digit down weeks for a lot of really big names, and then 5% for the huge tech names, like you mentioned, Sean. So not great, right? But unless you're looking for some opportunities, right? But the bears, the sellers have taken over. We were in the fear part of the fear and greed index. It's been forever. Like I feel like it's been, I don't know.
It's been a while. Yeah.
It's been a while, yeah.
But you can see these numbers over here is exactly why, right? I mean,
it's actually more than a year if you look at it, right? 1 year ago we were in greed.
Wow.
Yeah. So it's been more than a year since we have been in fear.
I mean, that's crazy to think about it. That's quite a run we've been on. We've seen the charts. We'll get into those, of course. But yeah, we're gonna see us, I think, hang around this area for a little while longer. We could have this quick spike recovery, but there's a lot of earnings this week to dissect and get into as well. So, but yeah, last week SPY was down almost 4%. Q's down almost 6%. I mean, diamonds actually did pretty well, which I like to see. DIA only down 1%, so industrials and whatnot holding up. And I think, well, I'll keep it rolling. IWM small caps down 3.4%, and then Bitcoin still not able to hang above the 70K, now down at 66, 67. I didn't check Bitcoin this morning, but
let me check.
Kind of leveled off. Yeah, we were talking about the miners a little bit, Kay, and
64. Bitcoin is 64. Yeah,
64. Yeah, so yeah, struggling a little bit to regain momentum after a really nice run for Bitcoin. So everything kind of taking a break here as far as equities are concerned, and volatility, VIX is up over 18, almost to 19. Very interesting. Anything else to add on this chart, you guys?
No, I think we've got core PCE on Friday as well as what
and the new home sales
events. Yeah, so just to watch out for that one as well. A bit of a volatile time just before market open on Friday. It's not too bad. I don't think it's not as bad as CPI, but it's there. Just so you're aware.
It's worth paying attention to. Definitely core PCE, right? That's what the Fed's looking at.
Yeah.
put the call ratio at 0.99, K. That's kind of interesting.
Yeah. It used to be around 0.7. Then it slowly crept up to 0.8. Now you're almost break even.
Yeah, we'll see where that pulls back a little or continues to climb. Here's the earnings. It's going to help us, figure that out this week. And just huge names, right? Tesla Tuesday. What do you think about that, Sean? You geared up for the Tesla Tuesday?
Yeah, I'll definitely be watching kind of what's happening with Tesla. But you've got massive other ones as well. You've got Meta, Microsoft, and Google, which I'm sure you were about to say, but I kind of stole that out of your mouth there.
No, do it.
But yeah, I'll be looking at Tesla definitely. I'm not too hopeful. I think guidance probably more so, but even that's looking a bit kind of rough. While I'm here, while I'm talking, I think end phase as well. Tuesday evening, I'll be looking at very closely, considering my yearly kind of pick was around kind of wind, solar, and hydrogen kind of new energy, basically renewable energy. So it'd be interesting to see how they get on. And yeah, that's pretty much it for me, really.
Yep, a lot to watch this week. What about you, Kay?
Well, pretty much Sean covered most of it. I think Boeing would be another one. It's not going to change the market, but at least we need to see how Boeing does. Personally, I'm also following Vale because I have a couple of leap options, leap calls on Vale. So hopefully, and then Intel.
Yeah, there's a lot. I mean, you got the chip space, just adding to that, you've got Lam Research. I think I'm seeing there.
Yes.
And then like you said, the big names. Google, Alphabet, Microsoft. But then I'm really interested in the energy space, and I actually hit both of my charts this week that I picked out were out of the energy space. We got ExxonMobil on Friday, so just a ton going on this week. If you were bored, just start paying attention because there's a lot to watch, and these earnings I think are really going to move the markets. And that brings us to our charts. So SPY this week, right? And I feel like we're moving quickly, guys. So let's take a minute to kind of digest SPY this week. We had that gap to fill. Normally when I see a gap fill like this, you want to see a quick bounce, but we're not getting anything like that. And, SPY's below its 50-day moving average, the 20 days curling down, and that's just a ton of red. So, Sean, I'll throw it to you first. Like, what do you make of this, breakdown here? And do you think we're going lower, or do you have any insight or thoughts you want to share on where we're going with SPY?
So with SPY, I mean, for me, I've kind of got a few notes on the SPY, QQQ, and IWM. So if you go out to the weekly chart, I know you can't do that just now, but if on the weekly chart, SPY and QQQ are basically sitting on the 20 moving average, which typically is a little bit, a bit of a bounce point, especially on the bigger time frames. So you could see here on the daily a little bit of a flush out, particularly on a Friday. Perhaps we gap up on a Monday and then we take off back up to kind of the 20 and the 50 moving average on the chart that you see here. So you could see that kind of gap fill, like you said, kind of a bit of a flush down and then a reaction. If not, you can see a complete capitulation, especially with the big earnings coming up. You've got Meta, you've got Google, and you've got someone else pretty big this week as well. So
Microsoft.
That's the one, yeah, Microsoft. Thank you, Nate. So we've got those three big names, and if two of them come in kind of hot, negative, I think we see more downside pressure. And then you're probably looking towards that kind of next step down, which is the 200-day, I guess, or 150 you've got there on the chart. Right. And while we're here, I think I'll just touch lightly on the IWM, which is the small caps. It's sitting right on its 200 moving average, so it's a little bit of hope there for small caps as well. So three big indices at very key points of support. So we'll see what happens this week when we get a bit of a bounce. It has been pretty rough the last couple of weeks. Yeah, I'll probably stop talking now, but that's kind of my thoughts. I think we could probably get a little bit of bounce here.
Nice. I would like to see some bounce. Kay, what do you think? Any hope this week for a bounce, or do you see more red?
So it's very interesting. So Sean talked about this one on the weekly. The SPY is on the RSI almost touching the 30, right, which is almost at the oversold territory. Interestingly, if you draw the Fibonacci, we are at the 50% retracement, 495, and that also has the biggest volume shelf. So if there is a breakdown, and question is, what could be the catalyst? We just talked about what could be the catalyst. We have a ton of earnings being reported. And the last piece of the information puzzle is on 426, the put to call ratio is 4.44. You have 974,000 put options versus only 219,000 call options.
That is very hedged. I mean, so this is not what we've been talking about for the past 6 months, right? It's the exact opposite numbers, right? And you see it in the charts. So, yeah, it's definitely interesting. I was hoping that we would get a little bit of a bounce at the end of last week instead of that additional selling, and because of that, additional selling, I don't know, like it got me a little bit leery, right? Just breaking down below this gap here, and I don't think you see my cursor, but yeah, breaking below the gap over here, and I'm hoping we get a little bit of support at 490, 491 for SPY, but I don't know. I mean, if it continues and we get, what do you guys think about the big names and their earnings, right? Like, it seems like they have to guide really strongly. They have to be like, everything has to be perfect. Otherwise, we're going to get more downside. But then again, some of these names did kind of, it wasn't like across the board they all had huge, strong guidance. But yeah, I'm a little bit worried about that. Okay, I saw you nod in your head. That makes sense to you?
Yeah. I think Microsoft is the driver. I think the baton has been passed from Apple to Microsoft. I think that holds the key from a guidance standpoint. I think Meta is going to drive well unless we don't know something's going to happen. Google will be key as well, but I think Microsoft is the one that we want to watch for.
Yeah, I think that makes a lot of sense. I will just add one more note here. RSI is sold off. We sold off RSI's way low here, and you'll start hearing people talk about we're oversold. I would just say keep in mind you can remain oversold or overbought for an extended period, right? So don't just jump right in looking for a bounce because RSI is low. We want to see that reaction in the charts. So let's keep it going though. Take a look at Qs because I think it highlights a little bit more what I was talking about with the range. I haven't added any annotations this week. Same charts that we've been looking at, and we talked about this range between 434.75 and 446.50, call it, and we were looking for a meaningful break in either direction, and we definitely got that, right? So that was Monday, and it broke through here. We had a pop up Tuesday to retest it, and that could have been an entry for a short, right? I mean, we got the rejection. This is your 5-day moving average here, and we never got above it. Tried to get there on Wednesday, and it sold off hard. So at any point in the first half of the week, taking a short position obviously would have worked really well and continue to work. But it looked a little bit obvious to me given the break. Of course, I didn't trade it, but that's the side note. Did either of you trade a short position this week or notice this break?
No, stayed away.
Stayed away. How about you, Sean?
No, I didn't. I've kind of taken a break from trading generally at the moment. I'm still looking at the markets, of course, but yeah, didn't catch this one, I'm afraid. But you can kind of see the aggressive selling on this one, can't you? I just see 404 on this chart, but then, like I said before, the QQQ on the weekly looks pretty good as well in terms of a little bit of support behind it. But
Right.
20 moving averages and everything, is it? So yeah, we'll see what happens with this one. And Qs, I think, run the market a little bit more than SPY. I mean, I've said this quite a few times, but I think it's just where we are in the world at the moment. It's very tech heavy. Everyone's talking about it. Everyone's obviously using it. So therefore, for me, I think it kind of runs the market. Obviously, it's a bit more volatile and the percentage is a bit higher, but still, that's where the money can be made.
Nice. I like it. I agree with you too. By the way, I see that we've got the ticker requests for Carvana. We'll definitely get to that later. And you guys go ahead and keep those ticker requests coming in. Appreciate you tuning in very much. And I think with that, we can continue on. I got to say, though, this Q's chart, man. I'm glad you brought up the weekly. I'm going to go study that a little bit more intently, Sean, because that'll give me a little bit more positive outlook, right? Because this chart made me sad this week. But anyways, let's get to some tickers that we've already got set up with some charts, and I'll hand it over to you, Sean.
Yeah, of course. So this, so I've been banging on about a weekly on the SPY and the QQQ, so I thought I'd dive into a couple of weekly charts myself. So first up, we've got DraftKings, and we can see my kind of favorite word at the moment. You've pointed this out to me, Nate, and I say it pretty much every week. Is Confluence. And I like DraftKings for the long term. Of course, gambling is always going to be a thing. Everyone's going to try and find a little bit of extra money. How they do that in terms of risk management, it's not up to me. It's not always the best kind of industry to get into and to talk about, especially around with family, etc. But we can see here, looking at the chart, it could be an opportunity for the long term if you think DraftKings is going to be as positive as I do. So in between this kind of 39.50 and 41 level, you've got the kind of green shaded area. This is kind of my ad zone. Okay, so you've got the kind of bottom of the channel, and you've got the 20 moving average, and you've also got that kind of 39.50 level, which was resistance back in November last year. So you've got a kind of bit of confidence there, not too much in the way of volume profile. But I don't really look at it too much on the weekly. I don't know if you do, Nate. Interesting to see your thoughts. But we do have a couple of ugly red candles, which is a bit alarming. But this is where I kind of like it to find a little bit of footing. Perhaps start a smaller position, perhaps start a kind of swing trade position, not so much a day trade position, and just kind of add to it kind of within this area. And if it breaks down, it breaks down. Have a stop loss around 37, 38, depending on what your risk levels are. So it's a little bit more of a kind of swing trade idea, I guess, for me personally for DraftKings. Any additions for this one?
Yeah, I'm going to jump right in. And, I love DraftKings. And again, thank you for bringing up the weekly chart because this looks like a really ideal spot to your point. Prior resistance, now becoming support. And when you mentioned the volume shelf, what I would say on the weekly and these longer term is you'll see this kind of pattern, right, where you get volume shelves for sure. And they're meaningful. I mean, there's definitely they're there for a reason, right? But it kind of ebbs and flows, and this is very natural, so it doesn't tell me a lot. This guy down here, which is down around $29 or so, it sticks out a little further, right? That does stand out to me. So if we got some selling, I would actually be looking at that $29 level as being very meaningful for we absolutely do not want to see that break, right? Or if we do, we want to see quick recovery. But overall, I think we're far away from testing anything like that. I like exactly what you mentioned here. I like this level. And it's just a really nice looking chart, right? We've just been marching higher, getting some profit taking, and then stepping right in and continuing higher. Really healthy. You don't like to see it just go rocketing straight up, right? Because then you're going to get, like we see with SMCI recently, huge down days and a big pullback. So I like it, man. This is a really nice chart. I said awesome. Enough. Kay, what about you?
And from your put to call ratio, it's 1.01, so pretty even out. Volatility is 51% for next week. So yeah, you probably would get good premiums as well on this one.
I've also just noticed a different technical indicator, and that's the golden cross. So you've got the 200 moving average kind of coming through the middle there with the yellow line. And you've got the pink line, which is the 50 moving average, and that is typically a golden cross, right, a bullish indicator for the long term. So we'll see how that plays out as well.
Oh, yeah, that's really nice. So let's get a bounce here for DraftKings. I like it. NBA playoffs are starting here, by the way, so why not? All right, keep it going, Sean.
Yeah, of course. Let's go.
All right.
So this one is ticker symbol ON, semiconductors. You brought this one up before as well, Nate, I think.
Yes.
Along the same sort of lines, you've got a lot of stocks that kind of around this area. And because where my phone is placed, I can't really see half of the screen, so you'll have to bear with me with my analysis on this one. But we can see it basically approaching the 200 moving average on the weekly chart. Again, as I mentioned, doing just weekly charts at the moment. Really aggressive selling after a double top at that kind of 50 moving average and that kind of $85 level mark. And we've lost about $20 worth of value here on semiconductors. So I'm not too sure where I'm going with this, but you can see where the support is kind of at the other side of the chart. Maybe can't really see that. My phone's in the way, but you can kind of see that. And kind of this channel where we're in now between $59 and 65, I think it is 66.
Yeah, 66. Yeah.
This is where I could be maybe starting position, adding position, and obviously if it was to break down below kind of 58, 57, then of course I would obviously cut my losses and move on to the next opportunity. On top of that, we have a potential RSI divergence in play. So we've got the low of, I don't know if you can use the cursor thing, but the low of October 2023 there. Yeah, perfect. And then if we do get a bit of a bounce now, then we are kind of a bit of a divergence there. It's not completely But you see what I mean? It's kind of coming up, but the actual stock price is further down. I hope I'm kind of describing that perfectly. But yeah, no. What are your thoughts, Nate? Because you brought this one up before, and you like semiconductors. I'm kind of stealing your thunder a bit here.
No, it's great. I'm glad you brought it up because it's tied heavily to the EV space, which I think is why ON is being beaten up here recently a little bit. And but right where you're at, this is super interesting. If I didn't even know what this ticker was, right? Like, and I was not familiar at all, this chart is super interesting because, as you mentioned, if we get the bounce at this 200-day, I mean, there's been support here. This is a nice area to be adding if we get the bounce. But if it breaks below that level, just like you said, cut your losses at about 58 or 57. I see a head and shoulders pattern here, right? And you got the back in what was that? Looks like April or so. We had the highs, and then it pushed much higher last year, and then it pushed much higher into September. Then we have had the selling, try to recover a little bit of bounce, right at the same level, right? So head and shoulders pattern. You get a breakdown below this 58, it could really sell off. But I'm trying to figure out why we would get selling along those lines for this name after having all this selling. Like, will we get some sort of catalyst to the downside? I mean, maybe if we get more bad news in the EV space, but I like the spot for a bounce. So yeah, it's going to go one way or another. And that's my favorite trade setup is when you're like, hey, this is it. This is make or break time. So it's really easy to cut your losses if it goes the wrong way.
When are they reporting earnings? Is it this week or?
I think it's a couple of weeks. I did look at it on the daily, and it was kind of a couple of weeks' time. Yeah, so it's just around the corner. Yeah,
good stuff. Yeah, I like that you brought on forward.
429.
429, you said?
Next week, yeah.
Yeah, another one of those opportunities on the kind of a longer term time frames, which I'm really looking quite a lot at the moment to kind of bolster my portfolio as a whole and trying to make money morphs over the long term rather than on a day-to-day basis. Obviously, I look for both because it's me, but yeah,
I'm glad you mentioned that. So we talked about, I think 3-4 weeks ago, maybe, that this was a trader's market and not an investor's market. And what we meant by that is we keep making new highs and new highs and new highs with like really no pullback for an opportunity. And so it feels like you're buying at expensive levels for your long-term portfolio in many respects. That's why we dollar cost average, so we don't think about that. But then at the same time, when you want to add additional chunks to your long-term portfolio, you're waiting for a meaningful pullback, and we're finally getting that, right? So now, just like you're saying, it makes sense to look at your long-term portfolio, I think, and start looking for those stocks or tickers that you believe in and seeing if they're getting to good support levels. So that's good stuff. Yeah, all right, Sean, where else can we find you?
You can find me on Twitter/X. I keep calling it Twitter, and I'm making that decision to just call it Twitter now because everyone knows it at that. Sorry, Elon, but it's happening. I'm just calling it Twitter. So you can follow me over there on Shaun Trades, not Sean Clark. I haven't changed the graphic just yet. It finally became available, so I've received continuity throughout my links here. So X, YouTube, and the Substack. That is my name. That's where you can find me. See you there.
Good stuff. Yeah, check out what Sean's got going on, and it's great. I'm glad you got the Shaun Trades on all the handles now. So take a look. It's funny you mentioned calling it Twitter because I've heard so many big names now that are like completely tied into Twitter, calling it Twitter, and they're just like, I give up. So
yeah, I give up too. I've conceded victory.
I love it. Well, I mentioned energy stocks, and so I'm going to get into a couple of tickers in the energy space this week. And good thing that you covered semiconductors because that's usually what I try to get into, and I missed that. And I couldn't miss the opportunity to get into energy. So first up, ExxonMobil. If you look at, by the way, the chart for XLE, the energy sector ETF, it looks almost identical because Exxon really leads that. Is the largest holding, right? Yeah, okay, you know what I'm talking about. Yeah. And so same kind of chart where we got above prior resistance, and now we pulled back to retest and bouncing higher. That's also the 20-day moving average you see here that the candles are bouncing nicely off of. These are the daily candles, so switch back to daily here. And I'm looking for continuation higher. What I drew in here is this 3-point Fibonacci from the recent low to the recent high, and then this pullback being that third point, this bounce here. and that's giving me my targets moving higher. So I'd like to see us get back to 123.72, and then 127.81, and then 134.41. Those are the targets for ExxonMobil. Really nice seeing the 50 move above the 150 down here. I'm guessing it crossed the 200 given the golden cross that you were talking about earlier, Sean. And just all kind of positive signs to me. I think energy is going to make another move higher. The sector is still only like 3% of the S&P, so I think there's still room to run. Sean, you getting interested in any of these names?
I am now. Yeah, just by looking at this chart, I really like the setup. Kind of a move higher, kind of retracing slightly, calming down, setting up camp, as it were, and then looking to move on and hunt for more food.
I like it.
Being money, of course. So yeah, I'm going to be looking at this one very much so this week. I've obviously been taking a step back from trading generally, but this one looks really good. I like it a lot. Cheers, Nate.
Yeah, what do you think, Kay?
Well, your put to call is 0.32 with 47,000 call options versus only 15,000 put options. So very, very bullish on that one. And honestly, Nate, unless things stabilize in the geopolitical space, I think energy prices will continue to rise. So we need some kind of like a stability so that can kind of halt the energy prices. But I like the chart. ExxonMobil, I'm long on ExxonMobil. I'm not trading ExxonMobil anymore because I think there are other better opportunities, especially in the other sectors.
Interesting.
But yeah, but I think it's a good. If you are long on this one, I think selling covered calls is take advantage of it now.
Gotcha. So yeah, a little bit different take. I like it, man. And I will say this too, even though there's the geopolitical scene going on, and that could, obviously have very big impacts on energy prices and how these tickers move. That aside, I'm actually thinking more about earnings. So all of these companies, these big companies, I think they're profitable basically anywhere oil over $40 a barrel. I've heard 60, but over this weekend, I was listening to the Compound and Friends, which is a great podcast, by the way. Shout out to those guys. Just amazing. And anyways, they were talking about, I think it was like $35.75 a barrel is where some of these names, that's where their cost per barrel are, right? So you're selling right now at 80, right? And just absolutely crushing it. So we get through earnings and you start seeing these names just huge beats and huge guides higher. I think we could just see right through earnings season, all these energy names make another move towards the upside and start marching higher again. So that's where my head's at. We'll see what happens there. There's other names in the space though, right? So ExxonMobil is the big name everybody knows and talks about. I like Viper Energy, VNOM, because of the way it moves. It makes big dramatic moves at times. It can be great to trade. And I'm seeing a very similar setup, not as, long of a, it's not as clean and pretty as ExxonMobil, but I kind of expect that with his name. And so VNOM is the ticker, another daily chart. We made this high of 38.76 and then gap down and started recovering, right? Fully recovered the gap really quickly. And then now powered above that recent high, pulled back, and I retested it. And Friday got a bit of a bounce. Notice the long, wick on the top here. So, Sean, I'm pretty sure you cued right in on that, but clued in on that. But that's the thing I want to see. I'll be a little bit more hesitant. I want to see this 38, level roughly hold up. And if it does, I think we could see another move higher. What do you think, Sean? I'm going to hand it to you first.
Yeah, I was alarmed by that topping wick there, but I also see it as a bit of an opportunity, like another opportunity to get in.
Sure.
You've got a really solid kind of resistance level of that kind of, 38.76 you've drawn there?
Yeah.
From the highs in February, which is nice to see. Again, a really nice setup, a bit like a Zon that you've got there. So nice setup from that down and looking to make another move higher. I don't use the 5-day moving average that much personally. So for me, I would actually look at this a bit more optimistically on my charts because I just wouldn't have it there. But I can see where your thoughts are lying there. I see where you're a bit more apprehensive than I would be. But yeah, I like the confluence that's shown throughout this chart, and I've also added this to my watch list for sure. I also like the RSI. Kay, sorry if I took that from you, but the RSI looks like it's just kind of up and down, maybe setting up for another nice little move. I like this chart.
Yeah, what do you think, Kay? We got earnings coming up, not this week, but next week, I think, for Vitamin.
Yeah, I think ExxonMobil and Chevron report this week on
Mhm.
Friday, and then this one is next week. I think we have a similar topping candle for Oxy, but because
Oh,
Oxy
right.
has been going up, crazy as well. And I mean, honestly, I think apart from SLB, which is I don't know why it's been stuck in the rut for a while in the energy space, everybody else is like making newer highs, or at least they're seeing an uptrend in the chart
Right.
pattern. Yeah.
Yeah, SLB has been an interesting name. I've been watching that as well. And it's not performing like some of these other names that,
Yeah, I mean, you would be surprised, right? I mean, I remember ExxonMobil was 105 level.
Mhm.
SLB was in the same space. ExxonMobil is almost now $120, and SLB is still in the same space.
Yeah. Yeah, it's interesting and that's something to pay attention to. Is there a reason why they're struggling? Is it a catch-up trade potential?
Yeah.
That's definitely interesting to note. And yeah, so I think energy is going to have a lot of opportunities. You might see more mergers, acquisitions activity as well. And then I'm again just back to what my actual thesis here is. These companies have earnings coming up. If they beat and guide higher because of the price of oil, I think they could run. So that's where I'm at. And let's go check out. I think that's everything for me. So we'll go look at where you can find me this week before I hand it over to Kay. And I'll be on Twitter at Trader Nate here, and also at you can see my writing. I write for Wolf Financial. I'm a featured writer, and I post on Sundays. And then I also have a trader's education where I like to talk about the trades I'm considering, break those down, and just give a overall market analysis. So appreciate all the new subs. I got something like 50, 60 new subs just this week. Really appreciate you guys. I'll be posting more here in the coming days. And with that, I will hand it over to you, Kay. What additional tickers are we looking at?
Well, I think you guys are not touch tech, so how can we not touch tech?
You have to. It's
We have
a mandatory.
mandatory. And generally, I tend to focus on the week's earning if it's getting reported. So Google is our first one. Just to put things in perspective, this company makes about $78-79 billion in a quarter. So nothing to sneeze at. That's higher than the market cap of many companies.
It's crazy.
Fine, right? But with a EPS of 150 predicted, and average implied move is about $8 to $9. So basically, what I've done is I've put together those two yellow bars that you can see. Those will be the implied move from the current price. So 155, you add about $10, $9, looking at 164. If it drops, you're looking at what, 145, 146, something like that. It's at a very interesting, and I think for most of the stocks, you saw what happened with Netflix. It wasn't about whether they beat the EPS, whether they beat the revenue. It was more on the guidance. Guidance is weak. Netflix also mentioned they are not going to report the subscribers numbers moving forward, so it's kind of spooking out the analyst. The Netflix stock was down. That's what we said last week on the channel. I said I generally don't trade, and Netflix has a habit of dropping, like a 10-12% when it drops. It moves because it's in $400, $300, $400 stock. Same thing with over here. And I think it starts to present a good opportunity for adding to your Google position. You saw Google was running up higher. I mean, if it falls to 146, I will start to feel confident in adding more to my position on Google. I think the 152 range, where the biggest volume shelf is, I think that is going to be the key. But post earnings, it doesn't matter, and those things can break very easily. So that's my take on this one. What do
I
you
like it. I'm looking to add to my Google position. So if we do get that pullback, I will be actively looking to add. I like them for the long term. I feel like they are starting to get things in order, and it's just inevitable for a longer term position that I just really like the company. They're the kings of data, and I don't know how you can get around that long term, right? Like I think they'll be able to leverage all the data they have significantly. But from a chart perspective, yeah, I wouldn't mind a nice pullback to that 145, 146, fill the gap that you mentioned, and get be part of the bounce right there.
Yeah, I like this one. I think I just had a little look on the monthly as well, just to see where the all-time highs were, and obviously we just recently reached them. kind of 162-ish area. So it'd be nice to kind of, if Google did have a positive earnings report, kind of break above that and stay above that. Keep continuously making all-time highs, which is exciting for a company such as Google. That level I've got is a bit of a retest level on here. I've got 148, which is kind of in line with what you've got on the chart here, Kay. So around a kind of 50 moving average line. So yeah, plenty in the way of Google, but I'd be sitting and waiting, anticipating the earnings and probably reading through them a little bit just to kind of get my thoughts and thesis for the future. But yeah, I agree with both of your sentiments for sure.
Yeah, I mean, I'm not playing the earnings. I'm actually going to play post earnings. If it keeps going up, I'm not going to touch anything. If it pulls back, I think I'll go ahead and add to my long term position. And it aligns with what you said earlier. Now is the time when the market moves into the fear and extreme fear is you switch your mindset from a trader to an investor and start looking at your long term portfolio, where you can start to add to your position.
Good stuff. All right, we'll keep an eye on one of the many names this week, right?
Yes, exactly.
What else we got?
Well, our favorite Intel. And you know what? Why? Because Intel is again coming back to those levels where we started to paying attention to Intel. Now, I'm not saying that Intel is going to come and blow the earnings out of the waters. What I'm saying is now Intel is starting to become more lucrative. See, we stopped touching or covering Intel once it started picking up and went beyond our range. And I said, you know what? It's not worth trading Intel anymore because the risk to reward ratio was no longer there. Now it's as it starts to pull back to the $32, $31 range, I start to get interested back in Intel. Just from an earnings standpoint, nothing to sneeze at, still brings about 12.78 billion for the quarter. So decent earnings. An average implied move would be about $3. So you're looking at what, 34.20, so either 37 or you're looking at about $30, $31 range. And if it actually breaks to $30, $31 range, that's when I guess I will switch to using it as more of a trading opportunity and also look at the guidance. But yeah, there has been negative news for Intel for last, I guess couple weeks or so. And I guess those are the reasons for this ugly chart that you're seeing.
It is ugly.
It's kind of ugly. That's funny.
Yeah, I mean, what a sell-off that is!
I'll be definitely $51. Look at that; it was $51.
Yeah, not that long ago either. Really,
exactly.
I mean, considering the market's just been moving up basically within this time span. I know, obviously, it's kind of sold off of late, but Intel's just been doing the opposite. But then does that spring opportunity? So you've got to be aware of these things. I like that 32 level, like you mentioned, for sure. Be interesting to see where the market goes until I think it's a Thursday. The earnings.
Yeah, Thursday. Yeah,
interesting to see where the market goes. If it drags it down to kind of 32 level, it might actually be worth taking a very small position into earnings.
Yeah.
Personally, so I've just noted that down on my notepad there. But yeah, I don't like this chart, but I like the possible opportunity if that makes sense. Thank you.
It's good stuff. Okay, I gotta come with some honesty here on the trading triangle. All right. So back here when you started talking about it, you brought it to our attention and Intel started moving up and you're like, all right, we're going to trade some Intel. I was very skeptical in the back of my mind because Intel has always been like, it just is always, I don't know if my timing's been bad, but it's disappointed me.
Yeah.
And then we would come back week after week and it would be marching and not just a little higher. Like this is an incredible run. It went from $32 up to 51, right? Like it's a huge run. And I was like, Kay knows what he's doing. And sure enough, like you said, you stopped trading it, right? And right after it got around, I think it was around 45.
Yeah, it was after my price, like 40, 42, I stopped trading.
Yeah. And then here we go. This was too expensive. The market figured that out. And now I have the exact opposite feelings as I did back when you started mentioning it. And I missed out on this great trade that you had. Now I'm like, let's hold this higher low, right? Let's come back here, hold a higher low. Even if I miss out like on an earnings spike, I would expect if we get positive earnings and if markets find some footing here, why wouldn't it march back to try to retest those highs, right? And so I like the opportunity now. And you were spot on before, so kudos to you on that trade.
I have more information as well. If you look at the monthly chart, the moving average, you've got the 20 moving average and the 200 coming in right under where it is now for the monthly chart, so, which is very, very interesting. It's a very ugly monthly candle,
Very,
but
very ugly. Oh my God.
it
3
looks
weeks in
good.
a row. Long bars down.
But it looks, it's there. It's ready. So it's something to think about.
It's at a good spot, right? Like we were saying.
Yeah.
Nice.
Yeah, I mean, whether you start a position or not, it's something you can put it on your watch list to see how it moves. And, I mean, it's not like a no-name company. It's not your, hyper-growth company who has improved a product. It's a well-established company, brings about $12-13 billion a quarter.
That's right.
Yeah.
Good stuff, Kay. Where can we find you for the rest of the week? And
Well,
always, really.
Yeah, you can find me on X. I mean, I've moved from Twitter. I call it X now. Same handle as X and YouTube as well. I did not get a same handle on Substack. I'll see if I can also grab the same handle. But yeah, I did post an article on Substack after a little bit of hiatus, and I hope to continue writing more on Substack, at least every bi-weekly or so. So yeah, find me there as well.
Love to see it. We had a divergence from the trading triangle. Shaun, did you hear that?
I heard it, yeah.
Thought we were going to get all three of us on board, but no, Kay's going to do his thing. It's all good.
He's down with the kids. That's what it is.
That's what it is. It is. All right, well, let's get some of these requests. And again, you guys, if you haven't already, be sure to subscribe to the Trading Triangle on YouTube. It helps us out, get the word out, and get more people tuned in. And then also be sure to check us out. Give us a like and a repost if you're following us on Twitter or X at Trader Nate here or at Wolf Financial. Appreciate everybody tuning in. We're almost at the 2,000 mark again this week. I'm sure we'll get there. And we got some tickers to go through. Also, see some regulars out there. Sebastian, shout out. And we got some tickers to go through. Carvana, Uber, got that request to see ENPH. What else? I might be missing some. So be sure to drop those in. And what do you think, guys? Should we switch over to some chart requests?
Let's do it, yeah.
Let's do this. Let's see if I've got a nice size chart this week because, had the teeny tiny one last time. Is this looking all right?
Yeah. I think probably the folks can tell us in the chat.
Let us know. I can make adjustments to the chart, make it easier to see. But yeah, let's see here. Okay, we've got Carvana up first, I think. So let's just jump into that one.
I mean, I can't believe this company was at $6. Ran up to $94.
Let's zoom out and look at that. Woo! What a run. So first and foremost, let me tighten this up.
I think somebody brought this up sometime back and I said the same comment. I'm like, every time I look at this chart and I feel like, man, should have, could have, would have.
So here's what I'd say about Carvana. Yeah, same, by the way. We had this peak way back here in August of 22, just below $60, right around 58. And now it retested a couple of times as we come along, right? Even tried to get above there at the end of last year, but failed. And then on this positive earnings, just absolutely gapped up, blasted through, and just continued to march higher. I mean, it's really been a nice move. And now we've got some pullback. Maybe we fill this gap and retest that long-time resistance long-time resistance level. And that 58 might be a nice spot to, add if it gets down there. I'm not sure it'll get there, but there's a gap to fill. So, I mean, people are paying attention.
Yeah, it's one of those where you keep it on your watch list and you kind of have a price alert attached to it. So, for example, if you're watching this now, I would be setting a price alert for Carvana at 58, and that's when I'd start looking at it. I wouldn't actually look at it, religiously, at least now. But it would be one of those where I set a price alert. I can get my words out then.
I like it. What do you think, Kay? I mean, we both missed it.
We both missed it, and I'm also looking at the options. It's very, very. The put to call is 0.4 for next week. Stays that for the next week, the following week as well, and then when we get into 510, it's 1 point. I mean, overall, the put to call ratio is very, very positive. With the IV though, it's 129%, 80%, 115%. So the IV is very high. So if you tend to trade options, you will get massive premiums. But again, this is not a ticker that I would be comfortable selling options on. I would probably do spreads to hedge my risk, so I can still profit from the move, but also have a bottom line, a shelf where I don't lose money.
Yeah, I think that this one's going to move in big ways like it has been, and the direction is anybody's guess. So be cautious trading options, whether you're buyer or seller, I would say. But Carvana's been incredible. Anything else to add here, guys?
Good.
Nice recovery in RSI. Do note that, right? We see a little tick up here, so I'll be paying attention to see if it can get above 40. And or is it right at 40? It looks like it's right at 40. So if it doesn't reject here and it continues to power higher, that's also a positive sign heading into earnings on May 1st. So Carvana's you could take a flyer, and I would just be willing to, that might be the trade here, guys, right? If you're looking for a big catalyst and move higher on earnings, take a flyer ahead of earnings, small position that you're willing to let go to zero if it's an options trade, because if it does not perform well, it's likely to really drop in a big way. It could drop $15 here pretty quickly. So that's how I would approach it anyway.
Yeah, and just to add to what you mentioned, that taking how you take the analyst ratings is up to you. But right now, the average price target is $63 from Wall Street. So looking about what 11-12% downside from here.
All right. It's been a great trade, and props to all of you who've gotten into it for sure. Let's take a look at ENPH next, because SHAUN, we talk about this one a lot, and it did not do what I wanted to do. Look at this.
Yeah, tell me about it. I've got a wedge drawn on my chart, and it's just basically breaking down. It even came back up and retested the wedge as a resistance, and then broke back down below it. So I guess waiting for Tuesday, which is earnings after market hours, would be interesting to see whether we get more downside, which is very possible in this market. High interest rates still, higher for longer is the kind of general fear at the moment. So it could be interesting to see what Bodie, I think, is the CEO for this one. So interesting to see what he says regarding the future of ENPH and the future of panels, what are they called, solar panels, for in the next coming years at least. But yeah. Interesting to see in technical basis for me. I mean, you're drawing lines on the chart. I'm not too sure what you're doing there, but we've got breaking down, and I just see it continuing because it's just a typical pattern, at least on my screen in the moment. But if you drew a support, so I know I'll keep talking, but if you drew a support from 6th of November ish, that low, and then just kind of meet all of the lows up until then.
This spot here?
Oh no, sorry, from the lows from 6th of November.
Oh, the lows.
Yeah, so if you draw it from there and just kind of follow the lows.
Man, if I can just jump in here.
Yeah, you can jump in whatever you want, okay.
Man, this options premium is massive on this one. For $106 put option, you're getting $700 in premium. So you're putting $10,600 and you're getting $700 in premium.
So that's you're looking. Kay is back in collecting options premium mode full time. I can tell. You've seen these opportunities on these pullbacks, right? And some of these names have really juicy premiums. So taking advantage of it by selling covered positions, right? We always recommend covered calls or covered cash secured puts, so that you're not really subjecting yourself to potential infinite losses, kind of a thing. But yeah, there's ways to collect big chunks of cash. And this is the time to do it, I think, when you get into these kind of we get these pullbacks and sideways kind of action. So you'll hear us talking about it more, I think, right, Kay?
Oh, absolutely. This is on my watch list now.
Nice. So here's what I would say. I'll just add this to ENPH. This big fat line here is from the 2 earnings ago. We had this big gap down, and it's been this is our anchored volume weighted average price, anchored VWAP, and it's provided support. And I'm wondering if we'll get another bounce here. Earnings, I think, is going to determine that, because we got that this week, obviously. But it's been a level of support, so something to watch. And then, SHAUN, what I was trying to draw earlier was what I was guessing was your trend line, or was your wedge that had a retest? But no, you're saying this is more in line. We had
Yeah,
that
that's the bottom
retest on
wedge.
Wednesday and it failed. Yeah, no, I see it. I definitely see it. All right, guys. Hopefully that helps out with end phase. Uber next. I have Uber next. Oh man, look at that! All these candles just falling lower. It's not what you want to see. Not what you want to see. Anybody, either of you tracking Uber or have any initial thoughts on Uber while I start drawing some lines?
I think no. Go ahead, Sean.
I was just going to say a lot of people like this stock. A lot of people. I'm not one of them, but yeah. Okay, go ahead.
No, I was just looking at my old drawn fib levels, and I think right now the volume shell. I think that I would watch to the level of 66.96, which is a 61% on the fib level, and that also has a decent volume shelf between 66.96 and 69.86. That because we also did the gap fill here, and then yeah, I mean, I would watch that level. Are they reporting earnings though? Let me see. When are they reporting?
Yeah, earnings comes up on May 8th, it looks like.
Okay, so we still have 2 weeks to go. Wall Street has a strong buy on this one.
Yeah, so we got the gap fill, right? So I would like to see a bounce, but man, recent gap fills I've been seeing have not been bouncing, right? They've just been cutting right through. So we'll have to see what happens there. But I've got this anchored view up again from 2 earnings ago. So interesting. It provided some support. Maybe we come back down. But the next big volume shelf, you mentioned the 60, right around 67.
Yeah.
Okay. And then next one down is all the way down to 62, call it?
62.84, yep.
And you get the 150-day moving average coming there. So that's actually more where I think the stronger support is going to show up is $62, $63. And if it gets that low, look for a bounce and buying opportunity because it was some pretty strong resistance before, right at 63. That's where I'd be targeting. If we get a bounce here right at 70, that'd be nice because of the gap fill, but I wouldn't be as optimistic just yet.
And around that 62.5 level, 90 days out, you're looking at a delta of 32. And no, sorry, 26, and you get about 2.51 as a premium. So if you like Uber for a long term, I think this could be an opportunity where you could take a position, not a position, but open a position here at 62.5 contract and hedge yourself further to $60 or $59.5 basically with the premium.
Oh, we got a bunch of new requests coming in, you guys. Woo! They're flying in. All right, good stuff. Let me get these names. So we got RIVN, we got Nike,
we have the
FCX.
VFF. I think next one is VFF. Let's see.
All right, let me get that one first. I think I missed that. So good call.
Oh, it's a penny stock, Village Farms.
Woo! All right. So penny stocks, I'll just say this right up front. I think we say this every time, right? Like, be very cautious. It's not something we typically trade. We look at stocks generally higher than $5, but we take
except NEO.
We trade NEO. We trade SoFi, right? SoFi, these names they tempt us. So but what I would say here from a purely technical standpoint is this is a bull flag. Right. We've got the big run up, and then you've got this kind of pullback consolidation. And what you're looking for is a break out of this, break above this kind of wedge that's starting to form, and another move higher. Continuation above the recent high of around 157, 158, and powering higher. That's what I would be looking for. But it is super high risk, obviously, because of the nature of penny stocks. Or what are we supposed to call them, you guys? Not penny stocks. Speculative. Yeah. But, you can make – I get why there's interest. Here you are, 70 cents up to $1.50 in just a matter of a month. That's not even a month. It's tempting, but it's going to be high risk, high reward here. Anything to add to this chart, Sean?
Just a quick plug that I did a bear and bull flag video the other day on my channel. So if you're not too sure how to kind of look for them, how to trade for them, you can head over there and have a look at that. Just got to have a quick plug on that one. But yeah, I agree. I like the bull flag on this one. Interesting company. Seem to sell peppers and cucumbers, all that kind of stuff. So yeah.
No, they're cannabis stock.
Yeah, they do that as well.
that
Yeah, I've seen that. Yeah, but they do producers market sells greenhouse grown tomatoes, bell peppers, and cucumbers. So what all the body needs, I guess.
Yeah, I like it. I like it. Let's keep it going, guys. I got Rivian next, unless I missed something.
You have there's Bitcoin as well, but we'll touch on Bitcoin later. We can go Rivian, UAL, Nike.
Rivian.
FCX. Ooh, I like FCX is in there. All right, let's start with Rivian. All right, zooming in a little bit here. We've got the trend line in place that started back in December, and we touched it in April, early April, a couple weeks ago, and just can't get above, right? I've got a bunch of mess here drawn. We've got a gap up still to fill up to 15, but it doesn't look like we're making any attempts. All the moving averages are lower. So, I mean, for me, the trade here is just lower until it finds a footing, unfortunately. I really like Rivian, but it's just not, it hasn't slowed down its drops here. What do you think, Sean? Any additional commentary on Rivian?
Yeah, absolutely. I think the industry as a whole is suffering at the moment. We've seen it with Tesla, seen it with Neo, seen it with Rivian, even Lucid if you count them. But yeah, we can see it's just struggling at the moment. But you know, there's plenty in the way, and if you can get above that, that's great. But I've said it before on this this channel before about how it's not going to be great for the next 6 to 9 months. I mean, they're shutting down the factories in Q2, which is, now, I guess, technically. So you're not going to see those kind of production numbers escalate as you might hope. And of course, delivery numbers will suffer as a consequence of that as well. But what it will do is it will present you with an opportunity if you believe in the products. You know, the customer satisfaction is very high for Rivian. So those kind of things really matter within a company. Good quality product, good customer feedback. That's what companies look for. And ultimately, that's what investors look for. So if you can hold out through this pain, add through it. I personally am. It's not financial advice, of course, but I personally am because I like the company. Just kind of adding little bits, kind of drip drabbing, DCAing, as you will. But yeah, no, that's kind of what I've got to say, really. Just hold on.
What do you think, Kay? Anything else?
No, pretty much same sentiments as Sean, but I think I'll be interested when it drops to about $4 or so.
Oh, that's another 50% from here. So
exactly, I'm not going to take a chance with
not pulling any punches. So here's what I would say. I just add one more thing because it could very much continue lower. So I would only get interested if it started making moves to make higher highs, higher lows. First, it has to get above 10. And then it has to get above 1150, right? And we've got the 20 moving average and the 50 at both of those spots. The volume shelf involved. So, I mean, if it gets above 1150 and holds that level, I would start to have some interest. It would still be very high risk, but that would be where I'm thinking, okay, now I can get into Rivian. If it continues to fall further, then we'll look to establish lower levels. But that's where I'm at right now. Good stuff, you guys. Both added quite a bit on Rivian. I like it. UAL, United Airlines. Whoa, look at that move after earnings. Very nice. So
taking off.
Yeah.
in a Boeing.
I really like it. So yeah, we had this trend line that it's broken above. That caught my eye first. Certainly nice to see this. So maybe we get a pullback and retest of this trend right around, $50, even though it's just slightly above 51.32. Did get this topping wick. I think is that right? Topping candle?
Yeah.
Topping candle. I'm trying to get the right verbiage here, Sean. And I'm mixing our two up. But yeah, topping candle, topping wick. And we could get that pull back to this trend line. And that might present a nice opportunity. What are your thoughts here, Sean?
I think for just a general thought around kind of post earnings, you can generally get good flags, if that makes sense. So we touched on the last stock, good kind of bull flags, bear flags. If the stock kind of plummets, then you're looking for that kind of retreat back upwards, and then perhaps obviously, depending on what the earnings report was like, a continuation to the downside, and therefore breaking the flag. So if you draw like a little kind of flag, I think you're doing it now already. Yeah. So if you have that. But given the dramatic increase on earnings, you would expect it to perhaps continue momentum as you're drawing now. So that's kind of what you want to see with the stock. A little bit of patience, a little bit of a calm down post earnings. That's what I'd be looking for. A little bit of a calm down and perhaps another move higher afterwards.
I like it. I like it a lot. I'll be looking to try to add anywhere here around 50 or 49. It looks nice. Really nice move here after earnings for United Airlines.
Like, do we know why what happened?
I did not catch that. We could definitely look into it. Strictly from a charting perspective, though, it's a really nice breakout here. And if we do get that consolidation, I would be looking for, adding at the lows of that consolidation and looking for a break higher and maybe using this trend line or, $48, call it $48.50 as your stop loss if you want to keep it really tight.
Yeah.
And, really nice setup here heading into the summer vacations, right?
Yeah, but I would also caution here for a second, right? Especially this week, considering there's just so many companies reporting earnings, that could, if the S&P does not hold its current levels, you could see some gains that could be given away on this one. So if you're not in a position, I would wait for some confirmation before actually adding and moving forward.
Yeah, because what you're saying, right, is we could get, and instead of that nice consolidation, we could get a break lower, maybe a rejection, and then
you could give up some gains, right? I'm not saying going all the way down, but at least giving up some gains because you have 3 days of constant, and that is actually a doji candle if you think about it, right?
Right.
And 70% of your companies report earnings this week on the S&P 500, right? All the big names.
So if you guys check out my newsletter, this is the kind of stuff I like to draw, and I get a little bit of flack for it because they're like, pick a direction, right? I'll get told, pick a direction. But this is wise, right? We're talking about both upside and downside potential and what it might look like. It could look completely different than what we've drawn here. But the point being, take into consideration all of these things so you don't just dump your entire portfolio into a single trade, right? Be aware. And I think that's what you're pointing out there, Kay. I think it's good stuff. Nike.
Oh, my favorite stock.
I would say, what do you think, Kay? What's going on with Nike here?
I'm liking it. The problem is that the 95.43 is acting as a resistance. It got kind of rejected two times, right? So 2 days ago, it tried to break it, but it closed below it. And then again, on the fib level, the last Friday, it just could not break it. So there is a volume shelf at 90, starts at 93.33, goes all the way to 95.43. So that has been a pretty good consolidation level. I think we just had earnings when 321. Wow, almost a month ago. But I'm liking Nike at these levels, especially with Nike being so low. I think for a long-term position, you can continue to add. It's a dividend-paying company as well, so you get paid while you hold the stock. So I like it for the long term. I like it these levels as well. So I generally tend to open options, CSPs at the money on these ones and let it expire or roll it off to add more to the week.
I'm glad I zoomed out. This is a double bottom right here, right? I'm not saying it'll necessarily hold, but I like the setup because of this, right? We retested the October lows and moved meaningfully higher right off of them. So you mentioned that volume shelf being a bit of resistance, and you can definitely see hitting that resistance here. And it's weird that we've got a big gap above it, right?
Yeah,
so
exactly.
If it breaks above, it probably just fills that gap really quickly. But you still got your 50-day moving average above, and your 150 and 200. So a lot of resistance above to get back to 200.
And if you think about the stock is actually at a very interesting spot. So if you are already long on Nike, you are probably adding the stock below the 200-day moving average. I tend to, if on my investing portfolio, stocks that are below 200-day moving average, I tend to add the DC, dollar cost average on those stocks as well. So you don't always have to play options. You can, dollar cost average on these stocks as well.
All right, guys, I want to make sure we don't run too long, but I definitely like this setup for Nike after that double bottom bounce. So we'll see what happens if we can get above that resistance. Let's pick one more. We got FCX.
Maybe we do have Meta as well, I believe.
Oh, okay. Let's do two more. All right. I want to do FCX because Freeport Mac, if I'm not mistaken, this is a play on copper. And it's had this nice breakout of that prior high back in July. This is something I was actually just talking to a friend about. See this, Sean? This nice retest and then move higher. Like that was the opportunity right around
Lovely,
44. Yeah, really nice, right? So now we get this move higher, kind of a retest of the 20-day moving average. It looks like every day it starts higher and then sells off, right? Similar to markets have been doing recently. Bit of a flag maybe, but what do you see here, Sean?
I see a bit of indecision. I'm not too sure where it's really going.
It's probably
Perhaps
the
a little bit
best
of resistance, kind of hard top. I would be seeing if it could hold the 20 moving average again, personally. And then if it doesn't, I'd be looking for a break in a short position actually around the kind of bottom of the kind of white wick, the most recent white wick. I think it's around about 48-ish, judging by, there. Well, yeah, where you were. So just basically
48.
a break of that back down to kind of the 44.70 level, which you've drawn before. Thereabouts. Obviously, I've probably taken profits on the way down. But yeah, short position in sight. In terms of long position, I think a hold of the 20 moving average definitely is key for this stock to move it even higher than it has done, because it's been quite a move, really, hasn't it?
Yeah, really
interesting.
nice. I mean, from 37 basically up to about 52. Really nice move there. And I agree with you. If we can hold the 20, it looks like, it held the 20 on this move higher. And then when it reversed off the 20, right? Nice resistance. And then once we got moving higher again, we test the 20. Let's see if we can hold it. And if it breaks, maybe we get another consolidation period. And I'll be looking for maybe a buying opportunity. But the price of copper I think is really driving this one higher recently. Don't quote me exactly on that, but I am.
You're right. You're right. Copper prices are up. Iron ore prices are not up yet, but the stocks like Vale are starting to show more strength.
Did you say Meta? Was that the next one we should look at, Sean?
Yeah,
Meta
we've got one from Nimaya Gupta. He said, analysis of Meta focusing on upcoming earnings. Curious to know about how you guys feel.
Let's look at it. Here's the chart and the daily chart, I should say. And this is the anchored VWAP from prior earnings. We have this huge gap up, right, from 400 to 450, if you recall. That was massive news. I think that was the dividend, right?
Yeah.
And it's held that anchored VWAP until last Friday, this first actual real break of it, right? I mean, early on, I don't really count this. And now we've established the level, it's retested. And so anchored VWAP from earnings is holding. It'll be interesting if we get a recovery. And back to our original comments, at the start of the show, is if earnings that they guide higher and beat across the board, then off to the races. But it has to be almost perfection. Is that what you're thinking, Kay?
100%. And I do believe that, interestingly, the entire Wall Street feels there will be a beat. So you have 31 up revisions on this one. But again, the guidance, right? And I think starting with Tesla, Microsoft, Google, Meta is just going to be it has to hit all bullseye for all of these guys.
Look at this run, right? I mean,
what a run. Wow.
I mean, I hope they do a stock split or something like that at this point in time.
And then watch this. Ready? Woo! Oh, is it gonna let me go? I gotta go to the weekly. Sorry, 1 second.
Can you move to the weekly? I was going to suggest that, actually.
Perfect.
Oh my God.
How about them apples?
Wow.
Right? Like that is
it's
the
like
definition.
It's like a valley V.
That's the V-shaped recovery. Like when you draw it in a textbook, this is exactly what it looks like. And yeah, everybody who piled in here at around 100 is feeling really smart right now, right? And you should. I mean, kudos to you. And you were all the way up here. I hit 500, kind of a psych level, right? In some respects. I wouldn't be surprised if we go back and maybe fill these gaps are from the daily. So these still show up on the weekly chart. But I mean, that's not a huge pullback given the run. If we did pull back and retest 400, but I mean, it seems like a lot, right? Dropping from 5 to 400. I don't know how we would just say, yeah, that seems like the thing that happened with Meta, given how they know how to handle earnings. Like they just seem to know what they're doing there.
Well, there is the news though, right? I mean, most recently, Apple pulled away the apps, the Thread and the WhatsApp from the China market, right?
True.
so not saying because the stock is going to pull back, but hey, these things add up.
Yeah, and they show up in earnings, right? Is that what you're getting at? Yeah.
And then if the TikTok ban goes through, which is up for voting, what? I don't know. I think House cleared. I think Senate is next, then President. If that happens, there will be some shakeup in the tech sector, right? Because stocks like the companies like Shane and I think a couple other like Temu, I think they advertise a lot on Facebook. So again, if the political tension starts to brew up, what's going to happen immediately on the stock? You will start seeing the impact. So a stock can fall and can fill the gap up. The gap down.
Yeah, I think the last thing I'll add here for Meta is 475. That looks like it would be a nice level to hold. And then after that, I mean,
there's nothing.
There's nothing. Yeah, exactly. So 385. Why not retest that prior high, and get some consolidation, quick recovery back above 400, and then continue the march higher? I would actually feel a lot better about that. Get a little consolidation before another move higher. If markets are going to pull back, that would make total sense for Meta, and I'd be looking for that opportunity to get in, maybe add to a longer term position. Did you want to add anything else to this weekly look here, Sean?
No, I think you both covered it really nicely.
All right, good stuff. All right, guys, there's more tickers. We could do this all day. AMC and Netflix. I see other names out there. Marvell. I'm a huge fan of Marvell. United Healthcare. I'll tell you what, I'm going to try to post some of these tickers later on, but for now, just note that we'll be back next week, same time, same bad channels. So you can keep those requests coming, and we will get to as many as we can. But let's go ahead and wrap it up this week, you guys. I'm looking forward to all the earnings, all the information coming up. Really appreciate everybody tuning in, by the way, live on the Trading Triangle on YouTube. If you haven't already, be sure to hit the like and smash the subscribe button. We appreciate all the support. Almost 3,000 tuned in again this week, you guys. So great to have you out in the audience. Appreciate all of you. And big week of trading coming up. I hope, wish you all a ton of luck and wish you all well. For me, I'm going to be paying close attention to earnings. Any positions I take ahead will probably be a little bit lighter, and I'm really geeked up about the energy sector, so I'll be focusing a lot more there, and maybe some of the semiconductor names, if they continue to pull back, maybe a little bit of downside trading there. So me, energy and semis, still be looking at those names. What about you, Sean?
Yeah, I'll be taking it easy. I think once again, just soaking in all the information. If I am going to do trading, I'll probably trade smaller sizes, smaller time frames as well. What I mean by that is kind of take my profit early type thing and kind of take my losses early as well, just because the market's kind of chopping around at the moment. You touched on it earlier, it's not really a trader's market, it's more of a kind of long-term market mindset, at least in my opinion. It's always a trader's market, let's be honest. But yeah, just kind of soaking information, enjoying the spectacle. I mean, earnings is essentially a spectacle, isn't it? Seeing how companies are doing. Tuesday's my day. Tesla and ENPH, I'll be very much looking forward to that one. But yeah, happy trading.
Yeah, good stuff. How about you, Kay?
Well, I think we unfortunately could not cover all the ticker requests, but what we can do though is, all three of us, we can pretty much take it and post our thoughts on our Twitter channels. X. So you can definitely make sure you follow us. You got me, yes. So we'll cover a couple of those stocks that we missed over here on our individual Twitter, X, whatever. And from my perspective, I think we talked about the tech names. I think this is a very monumental week, I guess, for the S&P 500. And I guess just wait and watch and keep watching, adding to your long-term portfolio. Not saying that you go all out to add, but of course, start a dollar cost average into your long-term portfolio for stocks that you like and want to hold long-term.
Yeah, absolutely agree. This is what these pullbacks are for, right? Buy the dip. We don't just talk it. You got to act on it. And that's the hardest part. And so, definitely take advantage of those opportunities as they present themselves. We'll keep trading and sharing our thoughts here on the Trading Triangle. And again, thanks to everybody in the audience for tuning in. We have a great time doing this every week. And, as the audience grows, we get more ideas, and I love interacting. So appreciate you all, and have a great week of trading ahead, and we'll catch you next time. Thanks, guys.